Good morning to all of you. Welcome to our class. Not sure what the number is. We are too few. Not sure what's happening today. Okay, so this the people will join us along the way. So we start off with a new topic on accounting for material cost. Okay, accounting for material cost. So far we've been discussing how we do determine the cost of a product, okay, and we say that the cost generally that makes up the product cost will be the material cost, okay, both direct and indirect, okay. We have labor cost, okay. We have production overhead cost, okay, as well as we do have the non-production overhead cost. Okay, so it's all enough we understand each of those key components of cost that will make up the final product cost, okay, material cost, labor cost, production overhead cost, as well as the non-production overhead cost. Okay, so we begin off by discussing the material cost. Okay, material cost. As we had mentioned at the beginning of this this unit, okay, material costs can be classified into two. Okay, we have both the direct as well as the indirect material. Okay, direct as well as indirect material costs. Okay, and we say that the key distinction is does the material that you're going to be consuming, does it form the final commodity, part of the final products? Okay, because if it does, then that material cost that we are spending on, okay, will become therefore direct material cost. Okay, so you have to consider whether the material, the cost you're spending on the material, whether it forms the final product cost. If it does, then that is a direct material cost. If it doesn't form the final part of the commodity, okay, however, it is not part of the production overhead, okay, then it's classified as the indirect material cost. Indirect material cost, okay. The key distinction, okay. Then in this topic, okay, we shall also be discussing, okay, how do we account for the material expense? Okay, how do we account for the material expense? Okay, and we say that you do have to create accounts, okay, both for the purpose of determining, okay, what was the cost that as a company we did incur, okay, when manufacturing this particular commodity. Okay, so again, for example, debit the store control account, okay, which refer to as the material control account, okay, as well as, okay, we are going to take into account also the cost you've been incurring, okay, towards, okay, the material that you have procured, for example, okay, the material that you have procured, okay, for example, if it is going to form part of the commodity, if it is going to form the part of the final commodity, okay, then you're going to put it in different accounts, okay. If it is a material which you have procured, okay, which is part of the material control account, okay, is part of the store ledger account, okay, then we are going to also, if it is not going to form part of, the final commodity, in short, it is indirect material, okay, then it does form, therefore, part of, we are going to account it individually, separate from the material costs we are spending towards the material that forms the part of the final commodity, okay. Okay, so that's what we shall be discussing in this particular topic. Okay, it's a core topic, so it's worth enough that you do pay attention. Okay, so type of material. Okay, so begin off by discussing what are the different types of material. Okay, before we even go ahead and classify material into indirect and the direct. Okay, what are the different types of material that the company can use, can consume? Okay, that will form the final part of the product. Okay. First, we can classify material based on the substance that makes them. Okay, the substance that does make them. Okay, are they okay? Are they maybe I don't know different commodities? Okay, are they what the best term to use? Okay, it has a substance that makes them. Is it maybe tangible or is it intangible? Because kind of a case where, for example, you can have a case where the material that makes up the final commodity, they are all going to be tangible. For instance, okay, others they're going to be intangible. Okay, the case of, for example, gas. Okay, okay, the case of gas, don't forget it is in itself is an intangible, so you can classify it. Okay, based on its physical natures. Okay, is it made of is it liquid form? Is it in solid form? Okay, is it in gas form? Okay, so you can classify that to be classification based on its physical features of the product that is making up the final commodity. Okay. Then also how it is measured. Okay, you can also have a classification that is based on how it is getting measured. Is it getting measured in liters? Is it getting measured in kgs? Okay, is it getting measured in terms of what is the measurement basis? Okay, that is used to evaluate. Okay, the material. Okay, how is it getting measured? Okay, that is another way we can classify material. Okay. So our main importance is more towards whether the material we are using irrespective of the classification that we're using here irrespective of its properties our main concern is about the cost. Okay, our main concern is about the cost. Okay, what's the cost the company will be incurring in terms of procuring that material. Okay, and of course we account the cost of the material. Okay, based on the respective commodity, the respective nature of the commodity. Okay, first, does it form part of the final commodity? If it doesn't, then it becomes part of the indirect material cost. Okay, which I think we have already discussed so far. Okay. Anyway, when it comes to the production, okay, and here we take the perspective of a company that is involved in manufacturing, okay, the perspective of a company involved in manufacturing, that implies therefore that you may have a case where you may have material the company has put in store, okay, we'll call the material cost. Okay, you may have the cost that you'll be having, okay, cost that therefore you may have material that are yet to be converted. Okay, the process of conversion, the process of production is yet to be in. Therefore, you may have the raw material. Okay, then as time goes by, you'll be having if the company has started off the production process. Okay, we have started the conversion. Okay, of the material to the final commodity. Okay, the conversion process has begun. Okay, but however, by the end of the day, by the end of the time period, it is not yet over. The production is not yet complete. Then that material is referred to as the work in progress. Okay, referred to as the work in progress. Okay. Then if the production is complete, okay, in short, we have the finished commodity, we have the finished good, okay, then we do classify that material, we do classify the inventory, okay, as what we call the finished good, okay. The product are ready, we have been able to manufacture that particular product, okay, and we have a final commodity, okay. However, you are yet to make the sale, okay. We are yet to make the sale. However, if the process of production is complete, okay. So those units that have been already they're complete in terms of production, then they classify them as finished goods, okay. The material, as I mentioned, okay, that are yet the process of conversion is yet to begin, okay. Then we classify them as the raw material, okay. If the process of production, the conversion process has begun. However, we are yet to finish the process of production. Okay, then we classify those material as work in progress. Okay, as the name is suggesting, it's work in progress. We are yet to get the final commodity. Okay. Because you have to be careful because the valuation of raw material, valuation of work in progress, valuation of finished goods is going to be very different. Okay, so you have to be quite careful. Okay, this material that we have, okay, what's the cost so far? Okay, the valuation process is going to be quite different. If we have raw material, work in progress, and in case we have finished goods. How you value the material, how you value work in progress, how you value the finished goods is going to be quite distinct. Okay, so you have to be quite careful when it comes to the inventory valuation, okay, which I think we should discuss in the next few slides, okay. When it comes to the ordering of the inventory, okay, as a company, you have to pay attention how many units, for example, am I going to be producing? Okay, how many units am I going to be producing? Because the procurement, okay, of the new material is dependent on how many units how many materials, for example, shall be consumed during that given time period. Okay, like the case we did yesterday. Okay, we had a raw material. Okay, we had opening stock. Okay, we had closing stock, and as well as we have the units we are selling. Okay, in itself is a control measure. Okay, trying to determine if you're going to start off production. Okay, we want to produce 10 units. These 10 units will be consuming 20 units of raw material. Okay, so we can work backward and determine if you're going to be consuming 20 kgs of raw material to make the 10 kg of finished commodity. Okay, therefore, how much material must I buy this month? Okay, assuming that I have an opening stock of material. So you must work backward and determine, therefore, how much material must I maybe purchasing for this particular time period. Okay? If, for example, you don't want to have excessive stock at hand. Okay? When the storekeeper places on order for materials, the amount that will be ordered will be dependent upon the sales and the material to be consumed during the production process. Okay? For example, the units we're producing, okay, for example, you may want to work backward, okay, determine that within the next 1 month, for example, within the month of November, okay, how many units do we want to do? Are we intending to sell as a company? Okay, we intend to sell 10 units, okay. You intend to sell 10 units, okay. Therefore, how much therefore must we produce this month, okay, in order to satisfy the demand of 10 units that we will be selling in the next 1 month, okay. So you work backward, okay, where the units we produce, okay, will be equal to the units we intend to sell, the 10 units, okay, plus any stock we'll be closing, okay, plus any closing stock we'll be having, minus the inventory we had beginning of the year, or beginning of the time period, or beginning of the month, okay. It's like simply working, it's like working backward, okay. It's working backward, okay. The units of sale is equal to, okay, if you're to analyze from that perspective, okay, unit of sale will be equal to opening stock plus unit to be produced minus the closing stock, okay. Which means the unit to be produced with the reverse will be equal to units be sold, okay, plus the closing inventory minus the opening stock, okay. Now, how much material therefore must we purchase? Okay, don't forget the material we again be purchasing is dependent on the units that we are intending to produce. Okay, so you have to tie those two together. Okay, the material they'll be purchasing, okay, is dependent on the units you'll be producing. Okay, as well as, of course, the material you had in stock at the beginning of the month. The material you want to purchase, the material that you want to purchase, okay, is equal to the materials that will be consumed during the time period. Okay, of course, this is based on the material you'll be consuming, as I mentioned, is based on the number of units you intend to produce. For example, if in the month of November we intend to produce, let's say, 1,000 units, you have to time, therefore, if we produce 1,000 units, how much raw material will I be consuming? Okay, you're making, for example, this assume that you want, this is the piece of bread that you want to make, okay, with the next 1 month, okay, you are Broadways, okay, you're making a piece of bread. In the next 1 month, or maybe the next one day, okay, you intend to produce 1,000 breads, okay. Now, how much wheat flour will I be consuming? Okay, for example, each bread consumes, let's say, half a kg of wheat flour, okay, just an example, okay, which implies, therefore, the number of units that the raw material of wheat flour we need to consume will be used, therefore, will be 500 kg, okay. That's the material usage part, okay. Of course, we need to add the closing inventory you'll be having of material minus the stock we had at the beginning of the month, okay. That, for this material we do intend to purchase, okay. I'll give you an example, and again make things a bit easier, okay. But don't cram this formula, okay. They're quite intuitive. This should be easy to understand, okay. First, determine how many units you need to reproduce, and of course that will be dependent. That will influence the material that we intend to purchase. Therefore, okay, the units we intend to produce, okay, which is of course dependent on the units you need to sell, okay, will influence the materials that we do intend to therefore produce for a particular time period. Okay. An example. Okay, go through this, then we discuss together. that you're working backward, that these are the units of sales that we intend to achieve maybe the next 1 month. You want to sell 90,000, okay? Opening stock that you had was 20,000, which means that this will not be produced, okay? So therefore, it's a reduction. Because already you have 20, even before you start producing. In stock, you have 20. That's what you can say, therefore, you're subtracting the 20, okay? When you apply therefore, it will be equal to, therefore will be equal to the number of units that we want to produce, okay? We want to produce 90 units, okay? Closing stock we'll be having will be 10, okay? So therefore, in total, 90, the one you are selling, okay, plus what you are closing with, give therefore 100. So 90 plus 100 minus the 20. Why are you subtracting? Because you're subtracting because 20 are already there, okay? So you're not producing 20, okay? They're already there. That's why we are subtracting the 20, and we get therefore 80,000, okay? I think it's quite an easy question. However, let me see how far I can go in this one. So in question, by the way, it's all clear. Units of sold, units of sale 90 plus closing stock minus opening stock. Okay, 90 plus 10 minus 20 to give us 80. Okay, so attempt this question. Okay, I'll give you 5 minutes. Okay, and you give me the units of the size of orders that must be placed in each of the month. Okay, so this one is applying the concepts. Okay, of course a bit tougher than that, or than what you just done there. Okay, but it's more engaging. Okay, so go through it, then we discuss together. Okay, so we took that here, the company has a plan to sell the following units. Okay, so in the month of August, the company intends to produce, okay, 1794, September 1100, and October 1200. Therefore, that's the total production, okay, or total units we produced for those 3 months will be equal to, okay, 1,000 plus 1100 plus 1200, okay, to give us therefore the 300. If the units that the company intends to produce within those 3 months is equal to the 300 units, and we'll be told that for each unit it will be consuming 5.5 kg, therefore material to be used or material usage for those 3 months will be equal to 3,300 units times 5.5, and you get how many kgs? Material K. Okay, this is material K. Okay, you're a bit far from the mic. We can't hear very well. I didn't hear very well. I'm not sure whether
18,150.
18,150 kgs. Okay, thank you. We get 18,150 kg to be the material that will be consumed, okay, will be used, okay, within those 3 months. Then the company has a proposal that by the end of those 3 months, we need to have a closing inventory, okay, we need to have a closing inventory equal to 200, equivalent to 200 units of incas. Therefore, 200 units. Then we want to determine therefore how many material, what's going to be the material to be used in producing this closing inventory. Therefore, times 5.5. Give us how much?
1100.
1100 kgs. Okay, 1100 kgs of material need to be consumed, will be consumed, okay, that will form part of the closing inventory. Now we have the closing inventory, you have the opening inventory, as well as the material usage. Therefore, the material that need to be purchased, okay, therefore, material purchases, okay, will be equal to the material that we're going to be used, okay, which you obtained will be equal to 18,150, plus the closing inventory, which you have seen is 1,100, minus the material we had at the beginning of the month, or beginning of the month of August, which was equal to 1,600 kgs. Therefore, what the material that need to purchase?
$17,650.
650. What happened? So it is 50 kgs. Eh, Alexander, where did you make the mistake?
Arithmetic errors.
Okay. You have to be quite careful, okay? Hamida, where did you make the mistake? Hamida, I think you had an answer. Okay. So you don't forget you get there for. So it's a very easy. I want to understand where you made the mistake so that in the future, you don't make the same mistake. Someone gave us 1763. I can't remember who it was. The one who gave 1763. Where did you make the mistake?
At the beginning.
Okay. Where exactly?
Where you added, I didn't multiply the
5.5.
Yeah.
Okay. See, you have to be quite careful because what is being asked here are not the units, but the materials being consumed. Okay, I see your mistake, but don't forget this time you're being asked material that are going to be consumed in making the 300 units. Okay, the one who gave us 2594, where did you make the mistake? 2594.5 is someone who gave us that answer. Okay, I suppose therefore you were able to pinpoint your mistake. Okay, though because someone gave us 2594.5. Okay, that's how you meant to work it out. Okay, I know you have to be quite careful because by the way the examiner, it also time the examiner is going to give you. If you do the wrong workings, then the examiner will give you a choice for that. Okay, so you have to be quite careful when working out some of these easy problems. Okay, they're easy problems, but you have to be quite careful. You don't make the same mistake. Okay. That's an easy question, okay? Determining how to get, therefore, the material to be consumed, okay? Now, when it comes to the accounting for the material, okay, when it comes to accounting for material, as I mentioned, we have to be able to make a distinction between the material that is being used to form part of the final commodity, okay, and the material that, as per se, it is an indirect material, okay, because the accounting will be quite different, okay? The material purchase are recorded as debit in the material control account. Okay, sometimes this is referred to as the store and ledger account. Okay, in the material control account. That once we receive the material, okay, like for instance, this material that will be purchased here, in the previous example, the 17650. Okay, this was 650. Yes, 17650. Okay, once the company receives from supplier, the material comes from supplier to the company. Okay, to account for that material will be received, it goes to the store ledger account, also called the material control account, as a debit because we received the material. Don't forget, material this is an asset. Okay, that we therefore need to debit it in the material control account. Okay, we are going to debit it in the material control account. Okay. So don't confuse by that because you're going to have a number of accounts here, okay? So you have to be quite careful. Now, some of those material will become part of the final commodity, okay? Now, if they form part of the final commodity, we need to open another account, okay? If they do form part of the final commodity, we do need to open an account, okay? In this case, therefore, we are going to open what we call a work in progress account, okay? A work in progress account, okay? So if the material, okay, that are going to be taken out of the store, okay, to be used in producing the final product, okay, and the material is direct material, it will form part of the final product, okay, then you're going to create it in the work in progress account, okay, you're going therefore to create in the work in progress account. So first, we need to remove the material, okay, from the material control account, okay. Okay, let me just open the T account so that I think it becomes a bit easy to explain from the T account perspective. So let me open my T accounts here, okay, in our board. So you see that once the company receives material from supplier, okay, so the company is going to be having what we call material control account. It's called the material control account. Okay, so once we see the material from supplier, okay, we're going to therefore it will be a debit. Okay, they're going to have therefore a debit here. Okay, of the material you have received in total. Okay, here we don't make a distinction. Okay, material A, B, or C. But let me call it material A. Material A, we debit it. Material B, we also debit in the material control account. Okay, now material A, okay, assume that material A form part of the final commodity. Okay, for example, we are making let's say bread. The wheat flour form part of the final commodity. Okay, therefore it becomes part and parcel of the final product. Okay, therefore we open another account here. Okay, to open another account here. We're going to call the work in progress account. Work in progress account. Work in progress account. Let me just let it in full for the sake of avoiding confusion. Work in progress account. So first we need to remove it from this account. So here we're going to say the material A. Okay, let's even make more. Let me expand this account here. Okay. Okay, material A, we consumed 100 kg. So we bought 100 kg of material A. Okay, these are kg. Okay, at a cost of let's say 10,000. Okay, these are dollars. Okay, assume that what is going to be taken to the production. Okay, is only let's say 50 units, 50 kgs of material A. Okay, so here you're going to take 50. So material A goes to work in progress. Okay, work in progress account, but only 50 kg. And the price, let's say 5,000. Okay, so here don't forget to it's the material is being transferred from the store to the factory. Okay, therefore that's what you can say. Therefore, I'm creating the account of the material control account. Okay, therefore in the work in progress account. Okay, in the work in progress account, and let me draw it here a bit better. So work in progress account. Okay, you're going to receive. Look here, it was a credit. So when receiving, because of debit, therefore you're going to have a debit from material control account, material control account. We have received 50 kg, and a price of 5,000. Okay, therefore it comes therefore debit on the work in progress account. If material B, okay, material B, they were indirect. Okay, material B is indirect. Okay, for instance, the oil that is being used, for example, in none of the machine that is making this bread. Okay, so the fuel that is used, that is the company is buying. Okay, the diesel, for example, that is being used in ensuring the machines are running. Okay, the use in the machine. Okay, the fuel doesn't form part of the bread. Okay, as per se. However, it is still material. Okay, however, it is still part of production. Okay, therefore, since the oil, let's say you're going to buy, let's say 10 liters of diesel. For an example, 10 liters, okay, of diesel, the price is let's say 1,000. Okay, first don't forget this diesel, as I mentioned, it does not form part of the bread, just per se. It's just used to ensure the machines are running. Therefore, it is not part of the final commodity. It is not direct material, but it is indirect material. Okay, since it is an indirect material, then we need to have another count here. Okay. Okay, we call the production overhead account. Production overhead account. Okay, so we first need to assume that we take 5 liters of the diesel that have been bought. Okay, so we're going to have here production overhead account. Production overhead account. We have taken 5 liters. Okay, at a cost of 500 liters. So again, therefore, this is a credit. We can therefore debit their side. Okay, therefore, material control account. Material control account. We have taken 5 liters of diesel at a price of 500. And that's what therefore we account for the material. Okay, that's what we account for the material. Okay, you have to determine the way. First, you have to be quite careful. Okay, how is this material? Is it direct material or is it indirect material? Okay, so where is this material? Okay, does it form, as I mentioned, the easiest way to determine whether material is direct or indirect is you ask the question: does that material form part of the finished goods? Okay, If it does, then that was a direct material. Okay. If it doesn't, okay, like for example, the diesel here, the 10 liters, they don't form part of the bread, okay, as per se. Therefore, but they're material, okay. They're used but to run the machine, okay. Therefore, they're part of production overhead. They're part of indirect material expense. Is it clear? And of course, once you get note of that, that becomes quite easy to be able to account for the material. Okay, it becomes very easy to account for the material cost. Question? Okay, great. That's how you account for the material. Okay, quite an easy way of trying to account for material. But you have to be quite careful time, therefore, where is, or rather, this material, is it direct or is it indirect? Okay, I think that's the beginning bit of it. Okay, once you get note of that, then an easy way to do it for sure. So material issued to production, okay, must be classified either direct or indirect. Okay, I think you have mentioned that. Direct material credited to the material control account, okay, and debited to the work in progress control account. If we have the case of indirect material, okay, like I mentioned, the case of, let's say, the diesel or the fuel used to run the wash machine, we remove from material control account by crediting it. We do a credit to remove it from material control account, okay. Then we debit it in the production overhead, okay. No, it's an overhead cost. Why? It does not form part of the final product, but it is material, okay. But it is material. Here, okay. Notes. Like materials that form part of the cost of making the product, okay, they form part and parcel of the final product, okay. Indirect material are other material expenses that are part of the production process, but not part of the final product, okay. They don't form part of the final product, okay. I think you have mentioned this in the past, okay. Okay. Once you get to note of the distinction, then it becomes easy to be able to account for the material cost, okay. An example here, okay. An example, we need to prepare the T accounts, okay, for the above transaction, okay. So do that in the next 2 minutes. Prepare the T accounts for this transaction. Okay, let's prepare the accounts, okay. So let me pick one of you to direct me how we're going to prepare it. Vanessa. Vanessa, take us through.
I'm still doing it.
Oh, okay. Emmanuel.
Yes, sir.
Okay, take us through.
I'm stuck a bit.
You're stuck.
Yeah.
Okay, don't worry. Let's see if we can get someone else who is going to take us through. Moses.
Yes,
You can take us through.
I didn't get the question clearly.
You didn't get the question clearly. Okay.
Yeah, my connection was acting up.
That's the question. Okay, so what are you going to do?
Debit inventory.
Okay, let me call it material control account or the inventory. So material control account. By debit, by how much?
102.
Okay, 102,000. So what do I call it? This 102,000?
Materials, inventory, stock.
Okay, bought on credit, isn't it?
Yeah.
Maybe let me call it payables because it was bought on credit. Okay, payables.
Okay.
Because
Okay,
it was bought on
payables.
credit, let me call it payables account. Okay, fair enough.
Yeah.
Okay, next.
Then, can you please go back to the question?
Okay, you can take a screenshot of this.
Okay.
Yeah.
Then you can credit the receivables by 88,000.
Receivable by 80,000.
88, yeah.
That's the receivable. Okay, let me create this receivable. Okay, I'll do as per what you're telling me, Moses. So I created by 80,000.
Yeah.
So 88,000. Okay, oh no, what do I call it? This 80,000?
I'm not quite sure.
Okay. So it's okay. At least you have taken us through some step, Moses. Okay, that was good. Okay, James. Thank you, Moses. James.
I'm not sure.
Just don't worry. Tell us what to do. James.
Yeah. I'm not sure.
Just tell us what you should do. Don't worry. It should not be the correct answer. It's just for us to learn.
Oh. Okay.
So let's begin first of all. By the way, what has Moses said? Do you think is correct?
No.
Okay, where is it not correct?
I'm not sure.
Okay. So tell us what you think should do. Then don't worry about what Moses did. What should you do?
So you should take the payables.
Payables, yes.
I mean, yeah, the 102,000. You put it under payables on the debit side.
On the material control account, or where? On the pay, I create another account for payables. So what should I do?
Oh, yeah, you put it on the material control account.
As a debit or credit?
You debit it.
Okay, there it is here on the screen.
Yeah.
Okay, so this you said from your side, this okay.
Yeah.
Okay, great. Okay, what next?
1,000.
Sorry, I lost you a bit there.
You take the 8,000.
I take that.
88,000.
Where do I take it to?
Receivables.
Receivables. So there it is here.
But you credit.
Okay, so it is here. This is a credit.
Oh, yeah.
Okay.
Yeah, that's all I know there.
Okay. Hannah?
Yes.
What do you think she do?
Okay. I'm just trying. I'm not really sure.
Mhm.
Okay. Where you've written the receivables account,
Mm.
you write work in progress.
Okay, so work in progress. So I remove this. Okay, Moses, you can see what Hannah is saying. So let's move this. Work in progress. This is work in progress account. So work in progress. Sure.
Then you debit the 88,000.
So I remove it here. They from credit to debit.
Yes.
Okay, I removed it. So 88,000. Okay, and what do I call it?
Material control.
Okay, material control account. So this is material control account. Sure.
Then you credit the 88,000 in the material control account.
Oh, so here material control account I credit. Okay, so material control 88,000. Okay, what do I call it?
Work in progress.
So I call it work in progress. Sure. Great.
And that's where I'm
Okay.
left at.
Okay, great. I think so far whatever that Hannah showed us is quite okay. Okay, but we need to open a work in progress account. Okay, which we have done, and we need to debit it with the material that goes to the work in progress. Okay, that forms part of the final commodity. Okay, someone had his hands up. Not sure it was Alexander. Was it you? Yes. Okay, great. Take us through, Alexander.
Yes. The first thing you do is you open an assets account.
Okay, which assets?
And just the assets.
Okay. What do I call it? That
And
asset?
then,
Just the asset account.
oh yeah, a non-current assets account.
Okay, non-current assets. So call it
Yeah.
Okay. What
And
next?
then you debit raw materials.
Non-current assets account. I debit raw material in this asset.
Yes.
Okay.
You debit 13,000 raw materials.
13,000. Okay, great.
And then you open a payables account.
Payables account.
And then one or 2,000 materials.
So materials 1 or 2,000.
Yeah, you credit.
I credit. So then don't debit.
Yeah.
Okay.
Yeah.
So materials account.
Materials 102,000.
2,000.
And then you open a materials control account.
Okay, I have it here.
Yeah, you credit direct materials.
Okay, direct material. Okay, so
88,000.
18,000.
88,000. Yes.
Okay, so work in progress, direct material.
And then you credit indirect materials 15,000.
Okay, what do you call that account?
Just in the materials control account.
Okay, material control account. I call it indirect material. Indirect materials. How much?
15,000.
Okay, my working here is a bit squeezed, but anyway, it's 15,000. We have done this.
And then you open the work in progress account. And then you debit 88,000.
How do I call it?
Direct materials.
Direct materials. Okay, so here let me call it DM. Direct materials 80,000.
And then you also debit 15,000. No, actually, no. You open the production overhead account.
Okay, let me open another account here. Give me a second. I open the account. Production overhead.
Yeah, and then you debit indirect materials.
I debit
15,000.
indirect material.
15,000.
15,000.
Yeah.
And that is it.
Yeah.
Okay. Great from Alexander. Okay. Now let me get Yvonne. Can you critique Alexander's working? Yvonne?
That's what I do also.
That's what he does also. Okay. Okay, great. Now there's some counts here that maybe they may not be necessary. Let me begin with one that might not be required. Okay. Now, first of all, we don't need to open an uncurrent asset. Okay. So let me just begin with, sorry, what is this? Okay. We don't need to have an uncurrent asset. Okay. Like the way Alexander has told us to do. Okay. Why? Because this is material count. First of all, the material, okay, it's a current, not non-current. Okay. So first, this is non-current, not current. Okay. So it's going to be, it's a current asset, not non-current asset. Okay. So you don't need to open a non-current asset. But what is the difference? Current assets mean that these are assets that we are going either to sell within the next one financial year. These are our raw materials. So you're going to sell them, you're going to consume them in the next few days. Therefore, they're current assets. Non-current asset, what does it mean? It means that this is going to be an asset we're going to use maybe for more than 1 year. For example, motor vehicle, okay? For the case of the motor vehicle, you're going to use the motor vehicle for more than 1 financial year. Therefore, it is a non-current asset, okay? For raw material, then we are going to use them in the next few days, maybe, okay? Therefore, they're part of current assets, okay? Maybe let's say it's where maybe I want to do the correction, okay? So therefore, this account, we don't actually, we don't need it, this account, okay? We don't need it, okay? So what you can do, since we have the material control account, that is our raw material account, by the way, okay? Since we have the raw material, we have the material control account, that is our raw material account. So we don't need this, okay? Just to begin with, okay? So we don't need the non-current asset. We don't need the non-current asset account, okay? Maybe you may want to have the payables account, okay? But it's not necessary, okay? So let's do it the correct way, okay? But whatever, at least what Alexander said, that most of the things that Alexander said is quite correct, okay? Most of the things. So let's do the correct thing. So first we open the material control account. So let me begin by tapping here the material control account. So material control account, which is our raw material account, okay? So you don't need to prepare another account, okay? So let's open the material control account. Here, we told that at the beginning of the month, I think maybe we do have some stock or material remaining. So beginning of the month, we had 13,000 materials remaining. Okay, therefore, I can call this the balance brought forward. Okay, balance brought forward. Balance brought forward. B is balance brought forward. Okay, so beginning of the month, we had a balance brought forward of 13,000. Then you buy, okay, from supplier, which you're yet to pay. Okay, we can see this. Therefore, supplier's account or payables account. Payables account. We have bought material worth 1,2,000. Okay, therefore, in total, we have materials worth 115,000. 115,000. Okay, then some of the material goes towards the 80,000 goes towards production. Okay, therefore, we have work in progress. Work in progress for the case of the direct material, 88,000. Then some other materials are going to, they are indirect material. Okay, it goes therefore to the production overhead account. Production overhead account equal to how much? 15,000. Don't forget we had 115 at the beginning of the total 115. Therefore, we still have the material remaining. Therefore, call the balance, okay, that is remaining. We'll call the balance carried down, okay, equal to the difference, 115,000, which is equal to 12,000, I guess. 12,000. Okay, don't forget the account has to balance 12,000. Okay, therefore we have the material control account. Okay, with a balance carried down of 12,000. Then we have, therefore, we do need to open, therefore, the production or the work in progress account. The work in progress account, which you have here, 88,000. Therefore, we have material account. Let me call it material control account. Okay, 88,000. Okay, and this goes to the finished goods. Why finished good? Because you're probably this is a work in progress. Once it is finished, it goes finished good, okay? Which is therefore 88,000. And you can close off that account. Okay, we can close it off. Then you can open the production overhead account. Production overhead account, we have it here. We have it here, which is part of the material control account. Material control account, which is equal to 15,000. Where does it go? It goes to the cost of sales. Can call therefore it goes to the profit and loss account. Okay, let me call it. It goes to the income statement. Goes to the become part of income statement. 15,000. Balancing balance off, we balance them off. And that is it. You're meant to have done there. Okay. So you may want to open the payables account. Okay. Let me just open it out, which you don't need for now. Because okay, you can still open it if you want to. Payables account. So here it was a debit. We can have a credit here. Material account. Materials supplied from by suppliers. So materials account of 102,000. Okay. Therefore, the balance carried down. We'll say it, you have not yet paid for it, therefore balance, which you need to have to pay the next month, for example, 102,000. Here, is it clear? Okay, that's great. Okay, don't forget this is an asset account. This is an asset account. Okay, so you don't need to open another asset account. Okay, maybe just to pinpoint what Alexander had said, we don't need to open another account. Okay, well, that's what you're meant to have prepared. And actually, this account for the okay, you may prepare it if you want to, but not a must. What here requires is material control account, work in progress account, and the production overhead account. Clear? Question? Okay, as I mentioned, don't forget, for every account, for every entry that you make, there will be a debit and a credit. Okay, for every entry that will be debit, credit, they must be there. Okay, if you don't put the credit side of your debit, then you're going to end up with the wrong accounts. Okay, so for every account to be a debit and a credit, always match those together. Okay, debit and a credit. Clear? Question? Okay, no question. Then fair enough, I think we can meet at 2:15. We pick from where we have left. Okay. Great. Then we meet at 2:15 and we start off. Yes, James, you have a question.